Well, San Diego is starting to see some positive signs in the real estate market. There are many San Diego homeowners who still owe more on their home than it's currently worth. Joining me to look at options for homeowners and where the local market stands now are my guests, San Diego real estate broker Matt Battiata and Dr. Michael Lee, director of the Corky McMillin Center for Real Estate at San Diego State University. And in the interest of full disclosure, we should tell you that Matt Battiata is an underwriter of KPBS. Oh, they're going to let me do it again.
We thought there was a little something that would be worth doing again. So since it was almost at the beginning.
Thank you.
And you may want to say that it's the Battiata Real Estate Group as opposed to Bat Battiata, because I'm not, the company is an underwriter. You know what I mean?
Did you hear that, Patty? Okay, so it's the Battiata Real Estate Group that's an underwriter, not
Yeah.
Matt himself.
Correct.
We'll change that. It's always nice when you get a do-over.
Yeah.
As long as the second time isn't worse.
Yeah.
And then you run the risk if you just keep screwing it up over and over.
Yeah.
I've recorded videos in the past where second
gets
time
worse
isn't
and worse.
necessarily better.
No, and that's why sometimes live is easier, right? Because, okay, we're ready? Okay. Well, San Diego is starting to see some positive signs in the real estate market. There are many San Diego homeowners who still owe more on their home than it's currently worth. Joining me to look at options for homeowners and where the local market stands are my guests, San Diego real estate broker Matt Battiata and Dr. Michael Lee, director of the Corky McMillin Center for Real Estate at San Diego State University. And in the interest of full disclosure, the Battiata Real Estate Group is an underwriter of KPBS. Thank you both for being here.
Thank you, John.
Dr. Lee, let's begin with you. So what is your overall assessment right now of the San Diego market, and how does that compare to 2 years ago?
We're bouncing along the bottom, which is better than it was 2 years ago when we were still somewhat in free fall. But that said, while you did indicate there are some positive signs, they're still relatively small, and we're not making significant upward progress.
So we're a little bit better, but in terms of people who are underwater, how many are there?
It varies depending on how you measure it and who's estimating it. I would say between 30 and 40% of San Diego homeowners probably are underwater. Mortgages are worth more than their house, particularly after transactions cost to sell.
So now, Matt, this is where you come in because you give people advice what to do. So what do they do if they're underwater right now?
Well, their options are to obviously stay there until they have equity again, which might be a long time. But if you can afford your home and you like your home and you want to stay there, that's an option. We see a lot of people obviously doing short sales, and usually they're doing short sales after they've already tried a loan modification and been denied. So those are pretty much the options: a loan mod, a short sale, or just stay there. Or, of course, throwing the keys on the counter and walking away, which is the worst option, of course.
And is that because of your credit rating, basically foreclosure?
It's because of your credit rating. It's also because if you have a recourse second loan, in other words, you've ever refinanced your second can and will go after you for the full balance. The benefit of a short sale is obviously it becomes a settled debt and the bank will not go after you.
Are we now entering the wave of homeowners who may be already foreclosed on their home? Are they getting close to where that's cleared from their credit scores right now, and are they entering into the marketplace again?
Well, I don't know, but certainly some people can repair their credit after a foreclosure. We're definitely seeing people who are doing short sales and then buying again. We're seeing a lot of people that did short sales a year, 2 years, 3 years ago who are back into the market, so definitely. Yeah.
Dr. Lee, we've heard about a lot of legislation, bailouts, all kinds of things. How are they playing themselves out right now for the homeowner and for the banks?
Well, I think that they haven't played out nearly as well as the people that created them thought they would. I think our attempts at modifying loans, both in terms of problems the borrowers have and problems in the banking system, have had far smaller effects than we thought. And, I think we're kind of nearing the end of that now, though. The new HARP program that gives you the opportunity to refinance, as long as you're current, regardless of your loan-to-value ratio, is going to definitely help some people, but it doesn't address the problem of the underwater mortgage.
Are banks now being a little bit more open to renegotiating, offering lower rates, and doing various things? Because wasn't there a lot of money put on the table for them to do that? Is that actually happening?
Well, that money is small relative to the size of the problem. I think that banks are more open to negotiating with you if the loan's in their own portfolio. If the loan has been sold and securitized, I think it's still a lot more difficult, and particularly Fannie Mae and Freddie Mac have not wanted to go down the route of principal modification or reduction, and that's they're the biggest owner of these loans in the area.
You know, we talk about short sales, but you hear over and over that they're really just a pain. that whether you're the seller or the buyer, that they can get hung up forever. I mean, you've got a new book out. You talk about what to do. I mean, in your experience, does it take a long time?
Sure. Yeah, short sales are not short, although they've gotten shorter. So short sales can take, right now short sales take 4 to 6 months, which isn't really too bad at the end of the day. They used to take a lot longer. But the reality is, you know, loan modifications have been a huge failure. There's no two ways about it. The overwhelming majority of people that apply for loan mods are rejected or given such a ridiculously small modification that they still end up needing to do a short sale or even go to foreclosure. So the reality is short sales are really the only option for people who are upside down and need to get out of their home.
Crazy now with interest rates being so low that people can't take advantage of it.
They can't refinance, that's right.
But you've got, what's the name of your new book?
Upside Down Nation. It's the Handbook for Upside Down Homeowners, and it's really an extension of the Upside Down Homeowner seminars that we've done over the last year and a half in San Diego.
We've got a link on our website about where you can get that book, kpbs.org. Thank you, gentlemen, for being here.
Thank you.
Thank you, Joanne.